Face Eagles. Let's have a great week. I'm Dale Pinkert. I'm the man. Everyone doing okay? Some great football this weekend. Vikings. What I like about this weekend in the NFL, guys, and it should give everyone hope, that's a retail trader. Brady is the only superstar quarterback left in the playoffs. You have Nick Foles, he bounced around from team to team, right? Then you have Case Keenum, who was traded from the Rams. He's an everyman journeyman, like some of us are. You know, we've been banging around the markets for a long time. Blake Bortles, not a superstar, getting the job done. So should give everyone hope that you too will have your day in the sun if you hang in there like these journeyman quarterbacks did on their way to a possible Super Bowl. So, all right, I want to talk about crude quickly here. So it overshot my target based upon the weekly.
Dale?
Yeah, hi, Steve.
Good morning, mate.
Good morning.
We don't see your screen.
Oh. Either my mic is too far away or I'm not showing the screen.
There you go.
And look, guys, put up with my old timers disease, okay? Because with old timers comes wisdom. All right, and Steve is always there to straighten me out every morning anyway. Let's see, it's 5 o'clock here. I should be very alert. Okay, crude. So the target was 62.80, talked about for a long time, all the way back there. Overshot the target. What kind of high do you have here in crude? I think this is a 1 hour chart. No, it's a 4. So let's stick with it. It's a 4. What would you call that RSI? I know there's a lot of people that have followed me around for years. You know what kind of high that is. What's a real simple implicator saying here? Okay, here's a hint. It's a confirmed high. Both price and momentum made new highs. Okay, you guys are too slow. All right, then we have the pullback. And we had new highs. What kind of high is this? Eric, is that a confirmed? That's right. And it happens to be just a shade over 70. So we're getting a little pullback now, unless it rolls over from here. I'd be stalking crude shorts. Maybe Steve will show the COT chart. I just want to show another reason why it's stalling here. You know, a lot of people never look at a monthly. I take a look at monthlies once in a while. Look at what's containing the crude right here. Damn thing. There we go. The 200 monthly moving average. Right there. All right, so we have one divergence. I'm waiting for one more. And I think in this zone, sometimes this week, we'll get some type of top. Am I looking for another crude crash? No, but I think it's viable for us to pull back to 55, these previous highs before the last pullback. So potential $5 to $10 on the short side if we get this right. And one of the reasons is commercials are more short than they were all the way back here when it was 140. It just keeps building their short position. But it's been that way for a while, right? And remember, we were talking about all the net longs, record net longs in euro. And that's when it was trading 118, 119. We're approaching the 200 up here near 24.5. That's where I think the euro could eventually get to. But we were talking about the crowded trade, you know, back in here. record net long specs, big, large specs, small specs, commercial, short. And we were talking about how crowded it was, and I said, yeah, you know, but it still looks like it wants 122. So if it's crowded here, and I'm going to be interested to find out if it's even more crowded or they pared them back. My guess was it was going to be even more crowded at higher levels once the majority that a lot of people would treat as a contrarian indicator were even more right. So I see nothing to do here. You know, I can't get long just buying this little pullback, the first little dip. I certainly can't get short. I don't have enough evidence. What kind of high is this, Eric, in the euro? So I never fade momentum like this. It's a confirmed high. So even if we do some work in here, to me, it would imply there's another high coming. But is this enough of a pullback to buy? I think Blake was saying before we shot up yesterday in his weekend review, 121 would be a great level to try along. That was previous resistance here. But you know what? When I don't know, I'm not afraid to say it. I don't know what to do. I will tell you, though, that my bias is now becoming, same with the dollar, I can't short it in the hole. I can't buy the first dip, especially off confirmed lows. But we are getting close to a level that we've been talking about for a long time. It's off this wedge line. So here's a weekly, and the wedge line comes in at 89.80 and then 61.8. Steve had a different line, actually came in down here. He prepared for me on an interview I did at TFNN. So I'm thinking between here, maybe a throw over. I figured down here at 88, this should take the euro to 125 if we're going to go down here. And then I was talking to Grega on Friday, and I asked him about the treasuries because he was calling this bounce in the dollar a wave 4, and now we're in a 5. And since I joined ForexAnalytix, he was calling the rally in the weekly. That's a 10-year yield. We show you the bonds. And they don't look done yet. All right, so we're finally making new lows here. So this was a 4. This whole thing was a 4 when I came here in last April. So we're going to complete 5. I think when Grega showed us charts, I'd say it's at least 121-ish was what I gathered from it. Okay, what's interesting about the 10-year, and this is going to play a role in the market eventually. So here's a daily, right? Okay, 10-year making new lows. Look at the 30-year. 30-year is not making new lows. So the yield curve continues to compress. I'll show the weekly. I know I'm taking up a lot of time. Maybe Blake has some things to say before there are numbers. Oh, to me, it feels like a lot of time. Been 9 minutes. Okay, so this is a 30-year bond. We still never took out this low. But look at the 10-year. We took out this low. So this is a flattening of the curve. Who knows, maybe it is going to invert. But both the dollar and the bonds were 4s, and now they're in 5s. So it's my conjecture that they're both going to turn around the same time. And my guess is, if you watch Blake's look at the week ahead video, he was talking about the parabolic nature in the S&Ps, and he said he can't think of one reason why the dollar would rally except maybe risk off. So I think that's what's going to happen. It all makes sense that we get some type of at least bear market rally in the dollar from, 88.5 to 89.5, some type of bear market rally in bonds and some type of risk off in the market. And lower crude, and crude also is a big part of the market. S&P is heavily weighted in oil shares. So when you think about it, the dollar's been going down for a year. Crude's been going up for a year. The market's been going up for a year. The dollar against the euro is down about, 18-20%. And the market is up more than that. But you know what? 20% of that's nominal gains based upon a weak dollar. So, I know it looks strong, but part of the strength has been the weak dollar. Okay, so it's helped commodity prices, it's helped multinationals, helps us export. So there is something called a nominal gain, and if your currency loses 18-20% in value in a year, you'll normally get that back in the market just based upon depreciation of the dollar. Just wanted to make that point. And so those are my views. I don't see doing it today, but looking for shorts in oil. Not ready to buy the dollar, not ready to buy the bonds, but I think between here and month end, those two scenarios will set up. I feel it in my bones. I see it in my work. I'm hearing it in my intelligence gathering. But even though I'm salivating, be patient. Be patient. Let the market give you evidence. Is that you, Blake?
It is. Good morning,
Hey,
Dale.
bro. How are you, buddy?
Good, good. And I echo your sentiments about football, man. Especially the Vikings game, man. That was something.
Oh, man. Yeah, I mean, even Keenan couldn't believe it. He was,
Yeah, it's pretty amazing stuff. And I hope you guys are. Hope everybody's had a great long weekend. For those of you that enjoyed it, I was actually out with my family last night at a place called Dave & Buster's. For those of you that don't live in the United States, and that is a money suck. I hate going there. I have fun. The kids have the kids have the time of their lives, but man, as a parent, it's like the biggest money suck in the world. Anyway, I actually
you'll have to make some pips today, buddy. You'll get it.
Well, I shorted the euro yen last night, right here at one. This was at Dave & Buster's, so right there at 135.83, and I shorted it. And I'm like, okay, I'm gonna put in a nice little stop, and I'll put in my stop up here.
So you're handing out money for what are games, like $5 a piece?
It's ridiculous. I'm not sure what the price is, but it's ridiculous.
So you were hedging yourself with euro yen.
Yeah, I shorted some euro yen. I shorted some Aussie yen. As we were at 88.30. I did this soon as I got home. 88.36. Soon as I got home, and I remember
asking you Friday where you might think about recommitting, because I know that you're long viewed and change, and you covered it well down there.
Yeah. I made some money in those yen trades, which was good because it's been the dollar. I've tried to step in front of the dollar a little bit, and I shorted the Kiwi, took a loss on that. I did short the pound yesterday during the and I put in a pip because it was big breakdown. Okay, so this is like the like key chart for me. Is you can see the pound, we hit the 618 retracement, okay? Previous support following Brexit, there's the night of the Brexit. So you take the night of Brexit to the lows, we hit the 618, it was the breakdown point. I had to short it there. That's like a rule, like almost a hard, fast rule for me, is I have to take the trade. Whether I end up making money in this trade or not, we'll hold on. Sorry, I just some news coming across the wires right now. Can you hear the
It sounds like a
squawk?
squawk. Yeah.
Yeah, you hear it. Probably sound like
through Bloomberg.
No, this one's not through Bloomberg. We have Bloomberg as well, but this one is a different squawk service. We have a couple of them that go off. This is actually coming through the office speakers. But
I missed that.
So, okay, sorry. I was just listening to what they had to say. It's actually some little political news right now.
Yeah,
but anyway,
until I saw your charger on the pound, I didn't realize how key of an area it is.
Yeah,
Great. I love your charts, Blake.
Thank you. So let me explain a couple dynamics of this chart in particular. Okay, so this is the previous breakdown point. Okay, and this is, you can see here, I'm just going to draw it out for you guys so you guys can see it. Let me grab a pen. Whoops, don't want to do that. Pen. Okay, damn it. This does it every day. Stupid Bloomberg chart pops up like out of nowhere. Okay. All right, so here's the breakdown point. Okay, this is the Brexit, the night of Brexit. Okay, this is the low. This is the 618 right there. So because we hit the breakdown point and we hit the 618, like I said, I have to short it. It's not like that's a rarity, and they pop up every once in a while. So I shorted it. Okay. Now, am I expecting us to go down to 125 from here? No, I'm not. But am I expecting us to come back to 136? Yeah, that's what I'm looking for. I'm looking for, let me adjust that. So I am expecting to move back down to 136. Now, 136 from here would be the 618 retracement. Okay. And you also have to realize with this pound. Okay. We also completed, see this flag here, right here, right? Completed the flag. Are you there, Dale? Just want to make sure. Okay. Okay. Can you guys hear me?
I can hear you, Blake.
Oh, you can. Okay. All right. Dale went quiet, so I just want to make sure that, and my squawk went quiet at the same time. So I just want to make sure everybody can hear me. I'm looking at all my data and it's moving, so I just want to make sure. Okay. Thanks, guys. And good morning, Stelios and Steve. All right. So we completed a flag pattern right at the 618. We, they have a smaller flag that was past completed. Everything was overbought. We have divergent relative strength here. Okay, you can see divergent relative strength as we hit new highs in price, relative strength diverge on the daily. So I had to take a short there. Now, like I said, whether or not I end up making money, it's not the point. The point is it met most rules that I look for, and very rarely do I see this type of setup, so I had to take a shot at it. And my stops are well above 138. They're like a 138.60 or whatever, but I took that yesterday. Now, like I said, am I expecting a move, to 125? No, I'm expecting maybe a move down to 136, maybe retest this breakout area. That's all I'm thinking. And it's not like a complete reversal type of pattern. I look at the cable, it still looks really strong. And as the blog illustrated that Steve and I wrote over the weekend, and I think Stelios added to it as well. Look, I expect continued dollar weakness. Is it going to be a straight line? No, it's not going to be a straight line. As I've been explaining to you guys for the last 2 weeks, I think that the dollar is going to give us these, opportunities of a bounce. And you can see the euro dollar, it's coming off the 123 level. I agree with what Dale said. Is the euro dollar look like a great short from here? No, but can it move back to 121? Yeah, like I'm interested in buying the euro down here. And hopefully if we get a correction in the euro down to 121, then that means the cable retraces back down to 136. And, and that's what I'm thinking at this point. So can I short the euro? I could, but I'm actually short some euro yen. So I'd rather just, stay in 1 euro short versus overextending myself trying to short the euro when the euro in itself is extremely bullish. If you look at so many different crosses. I don't think overextending myself going counter trend in the market makes a whole lot of sense. So like I said, even though I think the euro dollar will still pull back a little bit, I still think the euro is going to outperform. So, you know, like currencies like the euro yen, or excuse me, euro Aussie, euro New Zealand, those are probably currencies that are going to, you know, continue to look pretty bullish from here, I would think. But that's how I plan on trading like the cable right now. And a couple of things. Let's talk about these yen pairs, because if you guys haven't seen it, Dow futures are up 200 points this morning. All right, stock market is extremely strong, and once again, the yen, it's a lot stronger than you'd think it is. Now here's the dollar yen. Now I'm gonna put this chart up here for you, and just, even though I have long yen exposure, being short New Zealand yen, short Aussie yen, I'm short some euro yen, and I'm making money, but I'm not super aggressive because stocks are still ultimately very strong at this point. But I have to say that the yen is performing very well despite the strength of the stock market. Now, if you really want to get bullish the yen, or the yen pairs per se, I think we have to let the dollar yen break above this 111 level. If we break above 111, that would ultimately tell us, well, we probably got a little inverted head and shoulder pattern here. You can see it right here. Shoulder, head, shoulder. You know, so if we break above 111, that should, you know, give us a nice little recovery trade. But that could happen. I mean, stocks are still very strong. You look at the S&P, you look at the, you know, Dow, you look at the NASDAQ, you know, the stock market is still extremely strong across the board.
Oh, Blake.
Now, yes.
In your video, you talked about the record RSI. All the data that you had went back to 1970.
Yeah.
There was only one other time it was up here, 1929. I saw in a tweet.
Oh, you did? Really?
Yeah, I forgot who put it out, but yeah, 1929, the RSI got up.
I think, what was I looking at? Was I looking at the Dow RSI?
Yeah, you went back to 1970. So there was, this is a record in the, you know, the last almost 50 years. But
I hear you, Steve. Steve wants to say something.
Sorry, I didn't know how well my microphone is being heard. The Dow futures RSI is currently above 91.5. It's an all-time high by big margin from the second largest print.
Oh, and is that on the daily?
Weekly. The Dow weekly RSI is above 91 of the futures, is above 91.5 at the moment.
Well, yeah. If you look at the monthly RSI, I mean, yeah, I mean we're trading at what, 89.25 on the month. I mean, those match the highs in 97 and highs in 87. You know, just before the crash. I mean, these are really extended levels and prices. But you know, I was talking to the guys this morning. I called the equity traders that I know in the old office that I used to trade out of, and they're like, there's no reason for us to sell right now. I mean, he goes, as much as, you know, me and you and everybody else is expecting some sort of pullback, I'm going to let price action dictate it. And right now, I mean, if you're looking at the markets still look strong. It doesn't, you know, we have overbought conditions that can remain overbought or be overboughter, you know, more overbought. And so it's important to realize that even though we're in historically high levels as far as prices go, does that mean that a pullback is imminent? It could.
Gotta wait for a day like Steve Volge did on the Nikkei a few months ago, some type of key reversal.
Yeah,
like that, you know?
Exactly. Like, okay, so Dow futures are up 200 points this morning, or roughly. Okay, if we close down, you know, 1.5% or 2%, you know, hey, that's probably a good signal that the market's done for a while. It might be for an extended period of time, but until we see that, there's no reason to be fading this market. The market still looks strong. Now, do I think it's coming? Yeah. Is it today? I don't know. Is it tomorrow? I don't know. Is it next week? Maybe, but I still don't know. So you just gotta let the market tell you that it's done versus assuming it's done. So with that being said, that's why I go to these yen pairs and I'm like, okay, well, I still can't rule out the fact or the idea that the dollar yen could take out 111, and I can't rule out the fact that the euro yen could still surge to new highs, and I can't rule out the fact that the Aussie yen, might take out the 618 retracement that was testing last night. I can't rule out the fact that the New Zealand yen won't respect this trend line and continue to move higher. So, or this Canadian yen that has this bear flag pattern doesn't negate it and move higher, especially with the BOC tomorrow. So those are just some things that I'm looking at. Even though I am short these yen pairs, and I shorted some last night, that doesn't mean that they can't come up in my face again. And that's one thing I want to point out. I may have taken some counter trend trades, but just because I'm counter trend doesn't mean I'm very aggressive, because I'm not. And I'm not ruling out the idea that they're not going to continue on in the direction that they've been going the last few weeks. Now, one last thing before I pass it over to Steve. Tomorrow's the Bank of Canada rate decision. The market has priced in a rate hike. The market is expecting a rate hike. There is a slight chance that they won't, just because of these ongoing NAFTA negotiations, and if they don't raise rates, the Canadian currency will get killed. The Canadian yen will be probably the one on my radar that I look at the most is a possible short, but because the yen's been so strong. But the US dollar Canadian could very easily be up at this 126, 126.50 again. And that's possible if the Bank of Canada for some reason doesn't hike rates, and also or they hike rates and it's extremely dovish. But that's for tomorrow, and it's not something that I'm thinking about so much right at this moment in time. It's just something that I think we should just keep on the radar going into tomorrow.
You think I should cover my Bitcoin shorts here, Blake?
Oh yeah, I guess the elephant in the room would be, Bitcoin has, tried to, well, it's breaking some pretty decent trendline support. If you were a ForexAnalytix subscriber last night, I'm the one that sent it out in Asia last night when I got back from Dave & Buster's that we were cracking this 4-hour chart, but we really need to clear the support down here at 11,000 for it to be really bearish. But there are, Bitcoin Cash is down 16%, Ethereum's down 13%, Litecoin's down 10%, Ripple's down 13%. I mean, these cryptocurrencies are getting destroyed today. So yeah, if you're one of the things that I remember reading, and I think we got some data coming out in just 1 second. Hold on really fast. We do. I think we have
Empire State Manufacturing, Blake.
Okay. Well, I wanted to trade it, but looks like I'll just have to cover it since I'm here. Yeah, just be careful. This Empire State Manufacturing. We'll see if it comes out. We're expecting 18.5. Stand by. We got 20 seconds.
We should have something like an elevator music or something like that, right?
Yeah, right. That would be good. One of the things I was reading about the risk of 2018 is if these cryptocurrencies get smashed, and getting hit one day doesn't mean anything, but if they get hit really hard, okay, hold on. 36. Wait, no, 17.7.
Yeah, marginally weaker.
A little lower. Okay. Yeah, not any big move here. in the
So
market.
people think it could be systemic if they have a
You-
route in crypto.
Yeah, because if you know the investing community gets hit really hard with cryptocurrencies, then they might sour on investing like as a whole. So especially the millennial age group. So that's like one of those. I remember reading a bank's like top 10 risks of 2018. It was just something to note.
They're trading their parents' money anyway.
Yeah, yeah. Hey, Steve, I'm going to pass it over to you. I got to get off to the markets. Yes.
Blake, before you go, it's a good opportunity to remind to people they have less than 20 hours. We extended due to the holiday, the expiration of the holiday, the New Year offer by 1 day. So they have.
Oh, wow. I thought it was over yesterday.
No. Because when we had initially planned it, we hadn't taken into account the, we wanted it to have 1 day of the new week as well.
That's what happens when Europeans plan these specials.
Exactly.
So, hey guys,
I take the blame with failures. Yes, absolutely.
Okay,
good hunting, buddies.
Hey,
Yeah,
don't drag me into this, man. Don't drag me into this. Go for it.
All right, guys. Hey, good luck today, and be careful and be safe out there.
Okay.
You too, Blake. Bye, mate.
Let's do safe FX trading.
True. Yeah, something. You can have safe trading as long as you follow your rules, and as you like to sing very often, Dale, as long as you use proper leverage, right? Because if you over leverage, if you use proper leverage, if you are wrong for a consecutive number of trades, which on occasion can happen to everybody, you'll still be okay. While if you over leverage, even a single trade can blow you up. That's a huge difference.
I don't know. It's kind of like saying, let's find a conservative crypto strategy.
Yeah, okay, that's a totally different story. Cryptos are a totally different story. There's no question about it.
All right, so
okay.
I know, Steve, you're not at this 1 day bounce in the dollar doesn't mean anything to you, does it?
To be honest, I've told you since a long time ago that I'm, that I believe that the dollar is going to resume lower, the DXY especially.
Yeah.
But on the other hand, I have to admit that after booking the last part of my USD NOK short, I'm now, which is very rare for me, but it has happened, and I'm okay with it. I'm now mostly in positions that are looking for some type of reversals. So, for example, the 3 positions I have at the moment, and as I said, it's very rare, are short gold. If you remember, my cost average is a little bit lower than what we currently are, and I'm looking for a pullback down to 1300. I'm short Aussie USD. I was short half a position from 78.60, and I actually added at 79.50, not today, yesterday. So my cost average is at around 79, and I'm also looking for a pullback there. I'm also short, I just added a while ago, SPX, and I'm looking for at least some type of a pullback. So far SPX, and of course that's not evidence that it's going to turn. Obviously, it's a big risk, especially with stocks. So I'm not advising anybody following this trade, as I said since the very beginning. We've had 11 sessions so far this year, and we have had in SPX 0 negative days. Actually, the implied rate of appreciation at the moment would mean that at the end of the year, the SPX should be 125% higher, so above 5,000. Meaning that I believe that this kind of a momentum is completely unsustainable. And I just felt that, I just wanted to take a stab at being short. So I now have a little.
Doesn't mean anything to you, but it is an expiration week this week.
No, it doesn't mean much to me because I don't look at things like that. I know that expiration usually we tend to to have specific type of moves in depends on commodities, on futures, etc. But I do believe that one of the next following days we might have some very, very large down day, and not only one. Do I believe that the SPX is going to find the top? Absolutely not. I believe that we are in the last stages of a bull run in the mania phase. I believe that this can last for several more months. But I do believe that we cannot go in a straight line. And currently, we are appreciating with an angle of 65 degrees. I mean, yeah, not possible. I mean, absolutely not possible. I mean, you know, it's too parabolic. I think a pullback is due. Usually don't take these kind of positions, but I just felt good about it. And end of story. You know, I've started the year with
phobia. I know phobia is a Greek word, right?
Yes, comes from the word phobos.
Okay, well, what's the
phobia
for fear of heights? Fear of heights.
Ipsophobia comes from ipsos, which is height, and phobos, phobia, which is, you know, phobia.
Okay. Yeah, that looks like the World Trade Center up there.
Yeah, just look at it. I mean, you can know when a move is completely parabolic. First of all, I have this on my chart since years ago. This pitchfork. Okay, as you see, at some point we even break below it, like very briefly when we had that correction, and we came from below its 200% line to currently be above
only one line left.
Yeah, and no, it's not one line. The pitchfork theoretically does not include this line and this line.
What are lines outside the pitchfork then?
Yeah, we are actually trading again, as we did in this period here. We are trading again outside the pitchfork because the pitchfork, that's its high line, and that is its low line. These are the 200% extensions. So we traded below it here and here and here and here briefly, and now we're trading above it. But we need to add to that, in the 9th year of an uptrend that has taken us from 670 to 2,800. Okay, and as we were saying before, indexes are hitting all-time highs, historical all-time highs, in weekly, monthly, etc. RSIs. Of course, as I said, because you know I'm not going crazy, or I'm not forgetting what I've been preaching for months and years. Seeing so overbought levels is the signal that you have a very, very bullish market, and in this phase, it's more than a bullish market. It's a market going in the mania phase. But as I said, it's completely a personal choice, right? I've been short the dollar, and we've been saying that the dollar is a short, and you know I've been making profits out of it in several pairs. But now you know my instinct tells me that I need to be looking for some reversal trades. One of them is the SPX. I know it's not directly a dollar trade. Now, you said something correct before. You talked about nominal gains. I do need to add though here, because it was one of my thoughts. I went back to March 2009 to see where the dollar index was back then, and coincidentally, the dollar was trading back then at 88, 89. We are currently trading, as you very well know, just above 90. Bottom line, the multiple times of the multiplication of the index values has happened with the dollar value being the same from the moment this bull trend started to today. We're actually a little bit higher still. So the gains we've seen in US stocks are not nominal, are actually real, because dollar is trading more or less where it was trading when the market reversed from the lows. Okay, just wanted to add that because you mentioned it. But you know, you were very right, because we also always need to pay attention to the currency movement of the index as well, because many times you see an appreciation in the index simply because the currency might be collapsing, or vice versa. Dave
Maybe
says,
looking back that far, that it happens at certain stages of markets, and you know, maybe I would say that gains have accelerated since the high in the dollar last January. So I think it's been more rocket fuel.
And it plays a role.
At this
and
stage.
it plays a role.
Yeah.
And it plays a role. But the fact that we started this bull run, let's say if we're mentioning the SPX from 670, with the dollar being even a little bit weaker than it currently is, means that if we want to evaluate the general movement from 600 to 70 to 2,800, the currency should not play much of a role, because even if it did, we have a little bit of a stronger dollar than we had back then at the moment.
Yeah, too far back, man. Makes sense, but a little far back.
By the way, Dave is reminding us S&P chairman speaks in 3 hours. You see any risk in his stock? No, actually, I don't. I think that you can see that the S&P must be quite content with the Swiss franc lately, because as you see, and if you remember, I warned about this move a long time ago. As you see, for example, the Euro Swiss, which plays an important role, we have the Euro appreciating against the Swiss franc, and actually steadily, slowly approaching the 120 level that the S&P had used in the past to establish a floor, which means it approaches a level that the S&P we know is content with the value of the currency, right? So I think that everything is so far is working just fine for the S&P, being the largest hedge fund in the world, basically. They have stocks being in a mania phase. They're making like insane profits every quarter so far, I repeat. And the Swiss franc is steadily, slowly, and in my opinion, without intervention, depreciating, simply because a lot of the factors, most importantly, factors that had to do with risk aversion and factors that had to do with fears about a Eurozone breakdown, have been steadily receding. Many of them have completely vanished. Okay, so the Swiss. Yes, Elio?
Sorry to interrupt. I just wanted to point something out to everybody. People who have been listening to the webinar or being in the chat room, or been with ForexAnalytix. Steve, since Euro Swissy broke, what was it, 108? That it was around, hanging around for ages. Well, as soon as it broke that substantially, Steve said straight away, "I think it's going back to the old floor, 120." And I was thinking, the guy's nuts. And he kept saying, you kept saying it, and you kept saying it, and it's almost there. So well done.
Thanks, mate. So as you see, the USD Swiss as well is in essence somewhat benefiting from that, because as you see from the depreciation, as you see, we have a very clear divergence with the Euro Swiss. As long as with the Euro USD, I mean, as long as the Euro Swiss was pegged, obviously the USD Swiss and the Euro USD were moving with a -1 correlation. So exactly, they were mirroring each other exactly. But as you see here, we have a very obvious divergence. For example, the Euro USD has been posting new highs, while the USD Swiss has not been doing so. So even in the USD Swiss, you see the effects of a depreciating Swiss currency. And I remember, and Dale, correct me if I'm right, I said many months ago that due to expectations that the Swiss should depreciate further, people that were looking to be short the USD should do it against the euro. So in essence, buying euro against the USD. But on the other hand, people that for some reason wanted to be long the USD should do it using the USD Swiss, because the weakening Swiss would favor that. So you had a clear choice between the two pairs, depends on if you wanted to be short or long the dollar, and so far it has worked like that.
Yeah, I remember you saying that, Steve.
So let's go ahead and have a look at a few currency pairs. First of all, I already showed the gold, by the way, before we go to currencies. Gold is currently testing an ascending channel once again. If it breaks below there, it has already overshot my target by a little bit. I was actually expecting it to perhaps reach the 1338 level, which was the 161.8 extension. It overshot it by a little bit. I'm waiting to see what's going to happen today, because if it rolls over from here and it breaks below the channel, I really believe it's going to be on its way to 1300. Silver, Stelio, by the way, since we mentioned it, I don't know, you probably noticed that it crashed before, right? It had another of these flash crash days.
Of course it did.
Yeah, it came all the way down to the previous support zone. It has now recovered somewhat, because that was one of these very weird moves that we've seen all too often, actually. I mean, for the nature of the move, and for some reason they're always happening to the downside, because I really don't remember seeing such price action to the upside. I don't know if you remember any incidents, Stelio.
No, I don't. No.
Yeah. Regardless, the silver is also, I'm monitoring this ascending trend line here. I'm going to completely ignore the flash crash incident and just not taking it into account, and see what happens.
We have to point out that most base metals have been doing pretty badly today, so it's not just silver. But
absolutely. Silver, but silver crashed. Which
of course. It's the usual effect that you see in illiquid times, and then what happens is for the rest of the day, it's just trading heavy. It can't really come back from being down 4% on the day or something like that. So it's now down 1.5% or something like that, and it's gonna probably close around there. So the goal of the hit has been made.
Yeah,
anyway.
That is true. Now, having to do with that, I showed it some time ago. Blake showed it today again. The significance of this 61.8, which we literally almost tagged. I mean, according to my chart, we came close like 2-3 pips away, which is like nothing. I mean, I don't even take it into account. So, as Blake said, there is a good chance we can get a pullback from here. I would be looking for 136.60, that high there, or even a little bit lower towards 136 for support. It's also this ascending channel, which we might retest. It comes between the two, depends on when we meet it. It comes between the two levels I just gave. So if we actually do pull back further from here, anywhere between 136 and 136.5 would be a good level to see some buying interest re-emerging. So I'm going to be looking for that as well. Now, having to do with the Euro USD, more or less the same story. I remain bullish, but does that mean that it can't pull back from here? It's actually likely that it might give us like some type of a pullback down, perhaps to 121 level, and then perhaps resuming from there. Regardless, as long as we remain above the 118.50 level, there is no reason to change the bullish outlook. The DXY has also broken to multi-year lows. Just to understand, we are now down to the level we were trading exactly 3 years ago, at the very, very, very beginning of 2015. Okay, but that doesn't mean that some of the dollar pairs cannot mount a pullback. For example, as I said, I'm still short the Aussie USD, but I'm looking. Actually, I have a double confluence here. The 78 triple actually, because it's also the ascending channel. It's the ascending channel, the 78.6 of the move lower, and the extension of this move to this move, because I initially expected this to be an ABC. Now it seems like it's a 5-wave move higher, which makes me, which makes me bullish in the short to medium term, but that doesn't mean that I'm not looking for short-term pullback. So at least I'm looking here for a move down to 79, and depends on what happens from there. I will, if that happens, I might bail out at no cost, so I actually don't end up taking a loss in the Aussie USD, unless I see some stronger momentum lower, which I'm going to look to make some profits. If we do see a daily close above 80, I'm out. I'm going to take a 110, 20 pip loss, and I'm going to be out, and we take it from there. But anyhow, I do see a 5-wave move higher here, and perhaps we're going to see something like that. So in essence, I'm a little bit troubled, because that points to me that there is more upside left, but I'm first expecting at least a move lower. Hopefully it's going to be down to 78, but if it's very shallow, it can be down to 79. Okay, same deal happens with the Kiwi, and because I have a friend asking for the loonie, let's have a look at it. Now, having to do with the USD CAD, I have to say the following. We're down, retesting the 61.8 of the move higher. I definitely remain bearish the USD CAD in the long term, okay? But I wouldn't rule out a reaction from this level once again, perhaps this time higher, up to this area, the broken range area, which is at 136.5, okay? So I wouldn't be selling here. Same applies with the USD NOK. I took the last piece of profits at the end of last week. It has now reached another support level. I wouldn't be surprised if we saw a rebound to retest the 8 level before moving lower. Okay. So I do see the possibility of some short-term rebounds in the dollar, especially against commodity currencies, and that would also go well with the possibility of a little correction lower in the stock markets. But we'll have to see. I mean, that's what my intuition tells me, but we'll have to see. It's still the beginning of the year. We still have several markets trading completely one-sided. I mean, we don't have binary price action, and I'm counting on the fact that it's going to start becoming a little bit more binary, because as I said, it's the 16th of the month, and for example, in the SPX, we still have had 0 negative days, which, I mean, it's 1/24 of the year is already over, and we haven't seen a negative day, even 0.1% down, which makes no sense.
Steve, I used to follow an analyst. His name was Eric Haydick, and he was a big believer in mid-month reversals, mid-year, mid-week. So here we are mid-month. Just so
let's see.
Yeah.
Okay, so what else do we have to show? Okay, Blake already showed that, but let me repeat it. I'm in 100% agreement with him. One level is key, not only for the reasons he showed, but it's also the neckline. It's the 50% fib. Okay, we already found support once here. We've now broken below it, so we might, this level might act as resistance from this point on. It's also a retest of the broken neckline of this head and shoulders formation. So 111 is actually critical. If USD yen wants to remain like strongly bearish in the short term, 111 should probably fail. A retest of 111, which we actually almost saw earlier today, should fail. Okay, if that breaks, then I'm going to be looking for the 111.60, 111.70 zone, because it has acted several times as support resistance in the past. It's also the 200 DMA is there. So the two levels I'm looking to confirm that the USD yen remains bearish is 111 and 111.70. I wouldn't want it to trade above 111.70 if that's to be the case. Okay. Let me see. Any other questions that we have? Steve, you think the USD Turkish lira has made the turn up here? Any thoughts? Sure. Let's have a look at it. I'm always checking these commodity currencies at least a couple of times per week. Okay, if you mean if it's made a turn to the downside, I'll tell you what I've said, many times ago. The Turkish lira is trading by far in the worst possible way in comparison to all other commodity currencies. So I don't know if it has made a turn, but I'll tell you two things here. First of all, to confirm a turn lower for the USD Turkish lira, which, if you see, the Turkish lira has been bearish against the USD. I mean, data here in TradingView go back to June 2009. Even since then, it was a relentless uptrend, as you see. We get a series of higher lows all the way. So for me to tell you that, first of all, I would want to see a break below this ascending trend line. Okay, so which comes quite a bit lower. Second of all, if you're not asking because, for example, you're Turkish and you just want to see what's going to happen to your income, which I understand because that means that you cannot get away from having actual financial interest in the Turkish lira, and you're just talking from a trading perspective, I would tell you that other exotic currencies have been behaving a lot better against the Turkish lira. I can give you several examples. The USD ZAR is one of them. Just look at it in comparison. The USD Turkish lira has still failed to make even a single lower low. It keeps giving us higher lows all the time, while the USD ZAR has undoubtedly topped at the very beginning of 2016. And after posting a correction that lasted for like, how many months was it? Like 8 months, it has been breaking to new lows from here. Okay, so it's quite bearish. Or if you check at the USD to the Singaporean dollar, same deal. Okay, and whatever other exotic currency you can think of, more or less the same. Even the USD MXN, if you look at it, same deal. Okay, so in my opinion, Turkish lira, should not be your preferred currency to be long against the dollar from the exotic ones. You have much better options. My pleasure. Stephen, in view on Palladium, yes, absolutely. Palladium has been, for fundamental reasons as well, has been extremely strong. I'm still looking for an opportunity to be short because I think it's very overbought, but it hasn't given me one yet. It has actually, overperforming, wedge after wedge after channel. I'm now monitoring this channel, and today's price action so far has been, I have to say, very interesting, because so far today we are showing the potential of forming an evening star formation and breaking below this channel. That's going to be quite interesting and might get me interested to be short for at least a move down to 1038. Okay, so it's one of the things that I have been monitoring, because also one of the things I'm monitoring to confirm that gold is turning lower, and having to do with crude that Dale mentioned before. This is the channel I've been monitoring in crude. So I really believe that crude should soon make a move lower, down to correct lower down to 59 is one potential target. That high, the triangle's high here, or even lower down towards 55 for a larger correction after this big bull move higher. But the first move I want to see is a break below this ascending channel, before I get a confirmed, reversal. So far, so good. It has stalled, but that's not enough. Okay. Let's see what else we have. Dollar inflation plus Erdogan calling for lower interest rates. What can you expect? Yep, Kerem, I completely agree with you. Erdogan has showed since years ago that he wants to intervene directly to what the Central Bank of Turkey is doing. I remember that he had even attended back then when the Turkish lira was getting destroyed. What was it, a year and a half ago, whatever it was, he had even attended a couple of meetings of the Central Bank of Turkey. And although the central bankers wanted to raise interest rates, he was actually advocating to lower rates. So yeah, makes no surprise.
Okay, buddy.
Let me answer this question and then I'll pass it over to you. You are asking, a friend here is asking if this is an ascending channel or a wedge. No, I see no indication that this is a wedge. Of course, I understand what you mean. I'm assuming that perhaps you're seeing something like this. Nah, that doesn't fit my criteria so much of a wedge, because if it was to new highs, yes, I could take this price action into consideration to make this a wedge, but no, I don't think this is the proper interpretation here. I'm viewing this as a steep ascending channel. I think that gold is overblown. I do believe that I'm a gold bull in the long term, by the way, right? But I have no problem trading a market both directions, and I do believe that the favors, at least in my mind, are tilted to the downside in the short term. I would really want to see a retest of the 1300 area. I think it's quite likely. Okay, I don't know what the catalyst is going to be, but I think that it's quite likely. And the move we've seen recently goes totally against also what we've seen in the yields, which also points me to the possibility of a correction lower for gold. More or less, same applies with crude, as I said. Okay, thank you all, and we'll see you tomorrow again. Don't forget, you have 20 hours to take advantage of the New Year's offer. I don't think there's any new offers going to be coming until next September. So especially for semi-annual and annual plans, this is your opportunity. But even for monthly plans, you can test ForexAnalytix by buying a month and getting one free. So I think it's quite a good offer. Thank you, Dale. Enjoy the interview.
Okay, thanks, Steve. Great job. John, I see you. I'm going to make you the presenter. Passing you the baton in honor of the Olympics coming up in Korea. Ready to watch you jump off one of those ski hills. Hi, Jean. Waiting for your voice. You can share your screen too.
So you can see my desktop?
I can't see it, John. Your volume's a little low. Maybe you could turn it up or speak closer to your mic.
Okay, I'll try to speak a little closer because I'm not sure how I can turn this up right now.
That's better. That's good.
Awesome. Yeah,
So, comment allez-vous?
Ah, ça va très bien, toi?
Je suis fromage.
No, I don't think there's so much cheese.
Great to have you with us today, John. I appreciate you taking time out of your day.
Thank you.
I like to start. I've been to your website, so I have some questions to ask you, but we're all really interested in how people get from point A to point B and the beginning part of a journey and how someone got involved in the trading business. You want to tell us a little bit about your background and how you got involved in this?
Sure, absolutely. Yeah, essentially my dad was trading as I was growing up, and I was watching him do his stuff. He would take the Sunday paper and look at the quotes for the stocks that he was trading, and he would plot them by himself on the piece of paper. And then every Sunday, this would become a routine. And he traded that way, and he ended up retiring early from Imperial Oil, or Esso, Exxon. I ended up following in his footsteps and trying to do the same thing. At the same time, I was working for IBM Canada in Toronto, and I had the opportunity to purchase shares of the company through my payroll deductions. And
Right.
in doing so, I started trading the same shares at the same time. And
Okay.
so I accrued somewhat of a portfolio doing that. And then I tried
So
my hand.
your dad used the Sunday paper for making his charts. What did he do? Just chart the weekly close?
That's right. He was just
Okay,
trying to
interesting.
weekly close and using simple, basic, keep it simple type stuff, such as
Yeah.
trend lines and basic patterns. He would just step in
Yep.
and out of the market. And then I found that very fascinating. You know, he was not a buy and hold type of investor. He was always looking for the better deal. And so I found that very interesting. And then,
Yeah. And how fortunate for you to have your father be your mentor.
well,
Because you know what a lot of people go through.
oh
And I
yeah,
know you got into the modern trading, you know, using all the technology and everything, John, but at least, you know, your dad probably talked to you about risk and maybe
he said
leverage.
a lot of that I learned on my own. After I failed miserably trying to play options, I had to recoup a lot of money. I had this feeling that I was owed something from the market. So I took it upon myself to do everything that I can to learn everything that I could about risk and risk management. And that was the part that I had failed at originally. And then
Did you learn this in options, that options are like relationships? 90% of them expire worthless?
exactly. And that's where my money went, where my account expired worthless. And
Okay,
so
yeah.
I really got burnt there. And then coming back from that, I found people like Steve Primo and Jennifer Thornburg, people like that. They had simple, basic systems with you know very few indicators, and they were making a living at it. And so I figured if I did something similar to that, I'd be able to manage a small account. And in doing so, that's exactly what I did. I started with a small account, and then I just grew from there. But
Okay.
I found the 3-bar reversal for me was my ticket. That's my golden.
There's that number 3 again. You know, it comes up all the time, the number
Oh,
of
yeah.
completion. You know, I teach 3-drive formations.
Yeah.
Let me ask you this, John, that a picture speaks 1,000 words. I think we'll learn a lot if we could see what your setup looks like
Sure.
instead of what we're seeing right now.
Yeah. Let me move this over to this side, and then so ever since my leukemia diagnosis, I've kind of backed away from trading in general. What I do now is I help people. I've signed up for a outfit called the Apiary Fund. They have their own built-in platform, and right now I'm using the beta version of the said platform. Essentially, I'm acquiring pips. You know, I do what I do on a daily basis, except if somebody has a question, I can tell them exactly what it is that I just did. I can't use the platform while I'm inside this go-to webinar. But yeah, so here it is. It's a set of Bollinger Bands. I have a couple of moving averages and an RSI here at the bottom. I favor an RSI of 5. That's
why 5 instead of the standard 14?
I like to be very short-term in general. A half an hour for me is an eternity. I don't want to trade anything beyond 5 or 10 minutes. I found an RSI of 5 granted me plenty of opportunities since, like for example, in this bullish.
Yeah, like right now, there's you had a nice divergence, a double divergence before the green candle.
Absolutely.
Okay.
Absolutely. There's so many opportunities are offered with an RSI of 5 on the lower time frame. Yeah, I can't seem to be able to move any of my charts here. But in any event, the for example, if I was to use down here where my mouse is at 1312, the candle that broke underneath the green line here, I would have sold that candle and probably stayed short until we broke back above right here.
Okay.
So that would have granted me that leg here.
Okay, and where are the green lines? At 30 and 70? I'm just guessing.
30 and 70, the two standard levels,
Okay.
yeah.
All right.
So
Okay.
instead of playing between the lines, I play the extremes.
So your doctors told you to de-stress, so now you're a coach? Yeah.
More or less, yeah.
Okay.
The stress had a lot to do with it, but also because I live in a remote town in the Rocky Mountains, I spend a lot of time traveling to and from my appointments, so I can't afford the time that I used to in front of the computer as much, and I'd rather spend it with family and friends. You know, I've been completed a plan of continuancy, you know, in case something happens. I have a lot more time now.
Okay. All right. Well, I'm rooting for you.
Awesome, thank you. I noticed in the past that you've had your fair share of troubles also.
Yeah. So you know, I haven't reduced any stress up.
There you go.
My retirement plan is slumping over on my keyboard, Sean.
Yeah, there.
So okay, so you work with, these are prop traders at Apiary?
I don't really work for them. I signed up for their program because I enjoyed their community. I was there before, about 3 years ago, and this is when I had to leave for my medical problems. So having come back to the community, I found nothing had really changed as far as the people, and unlike Facebook, it's not polluted with ads and spam and all this kind of stuff. So it's a group of adults that hang out, and they're all trying to teach each other, you know, how to trade. And they take in new clients daily, on a daily basis. They have their own platform, like you see there, and it's a no nonsense type of outfit. There's no spam involved. It's I really appreciate the environment there.
Okay. So what's your business model now at Jasper FX?
Well, yeah, for me, myself, and I take on private clients, just people that are willing to learn or that have some sort of a background in trading already. I'm more than willing to take them forward and teach them.
Would you buy the euro right here on a 3 drive to a bottom formation?
Probably, yeah. Coming at this time of day for sure. It probably wouldn't be a very long-term trade though. Okay.
And if it started to work, would you come out at your yellow moving average? What are those moving averages up there?
Well, that's a 21. It's a set of Bollinger Band set of 21 period 2. The yellow is the mean of that 21.
Okay.
The purple is a 55 EMA, and the brown is a 6 EMA.
Okay, so we're about to get a reversal candle live.
That's right.
Would you be interested in having me coach you on the 3 drive to a bottom formation?
Sure.
I'm kidding. So let me ask you this. So you coach people, how do you do it? All right, everyone, if you bought the euro, take half off, tighten your stop.
Basically, yeah, it's for the people that I've had problems having a win. I remember being there having one loss after another, and then if you can see here, just for today, I can't click on this, but you could tell here just from this morning, you know, I don't get very many losses.
What kind of leverage do you tell people to use, Sean? I'm curious.
Anything below 100 is probably the safest way to go. If you go beyond that, you're hurting yourself in your account. You know, leverage is it's the rope that the broker gives you to hang yourself with.
I like that metaphor.
The
But you know, it's almost foolish of the broker. Wouldn't they be better off if they offered less leverage and there was more longevity of the clients to generate more trades off that
Absolutely. It's counterintuitive. It makes no sense to me. But if that's their business model, that's the way they want to do it.
Do people ask you, Jean, how much money does it take for me to trade for a living? And if they do, what do you say to them?
Oh, well, $10,000, you won't be going very far. So that's why I went towards the family fund route, or some sort of a equity fund. Trade their money instead. The capital has always been the biggest hurdle to getting started in this business. It seemed to me way back then that even if I went for apiary fund or a top step trader or one of these guys, and if you could prove your skill, they'll give you money to trade with, and hence the capital is no longer an issue.
Okay, so there's the first target at your 21 EMA.
That's right. I get out just about there.
All right, so I got paid to interview you today. So do you want to show your website, John? And
I don't have that on hand. This is not my typical platform right here.
Okay. I've interviewed a lot of people. What would you say is the most important thing that you could pass on to traders? The most important advice?
Definitely limit your risk, limit your exposure to the market. And for me, my style, I found it profitable to stay in the market as little as possible. So I found myself to be a scalper. If I was to swing the market, I'd probably lose my mind. I wouldn't be able to sleep. I like to get paid. I'm not an investor. So I go to work every day, and when my session is over, my day is over. If I can do that in 2 hours, that's fine by me. You choose your work day, you choose your work hours, you also choose your risk.
Yeah, nice. And you know, I could understand that because I've done both.
Yeah.
And you're right. It's like people would ask me, John, Dale, do you take positions home over the weekend? And I would say, yeah, I can't relax unless I have something to worry about.
That's right.
So, but you're right. If you really want to simplify your lifestyle, if you could do it successfully and not just make your broker rich, scalping, walk in. I knew many guys on the floor. That's what they did, John. They didn't hold positions. If they did, it was a mistake, called an out trade.
Yeah,
so,
absolutely.
Just to know you're done. You put in your day's worth of labor. Doesn't matter if there are ballistic missiles flying or someone from the Fed said something overnight. Tomorrow's another day.
And trading Forex grants you the autonomy to pick the schedule that you want to trade. Having matured enough to operate inside risk, it gives me the opportunity to see where I failed in the past and what I don't want to see other people do. And so following my doctor's advice was the best thing for me to do.
Yeah, and isn't it, let me ask you this, I mean, it's nice to make money in your own account, but isn't it almost as rewarding, maybe not in a material way, to help people that were having difficulty find a level of success? It's like, what good is anything until it's shared with another?
Exactly. Yeah. And if you keep reminding people to focus on size and exit, they'll eventually get it. It's a matter of finding your own way. You can't just expect to copy someone else's system. I see so many people trying to, they try this one day and they try something else the next day, and the
search for the Holy Grail that doesn't exist.
Yeah, absolutely. There's no opium out there.
Yeah. What do you tell people is the secret of trading? Do you ever see ads like that? Learn the trading secret. What is the secret?
There is no secret. You are the
secret.
Yeah, that is the secret. It's within you. You have to find it inside of yourself. and it's there. You will find it. You just have to keep searching. Too many people quit too early, and I have had so many opportunities just to walk away. I can't recall how many accounts I've blown up, and then I've been found a place like Apiary Fund where you get to trade a simulated account until you have a system that is profitable, at which point you've created a track record and they will fund you for that track record. So it's an opportunity for a winning end at both ends.
Nice.
Can't really
I appreciate you. Yeah, I'm sure there's some people that right now funds are an issue that
Yep.
are either, watching us right now or will see the recording. Great suggestion for people.
Yeah,
And-
absolutely. There's capital available. You need to have a track record to prove that you deserve it.
Okay. Thank you so much for being with us today, John. Godspeed. Keep the faith.
Likewise, sir.
Doctors aren't always right, and money comes and goes. Time is gone forever. I know you know that one now.
Oh, yeah.
I wish you longevity to be able to enjoy your family and friends and continue your mission to teach people your hard-fought knowledge, my trading warrior brother.
Thank you very much, Dale. Thank you. We'll see you online.
All right, it was great meeting you. Thank you for your time, John.
Thank
You
you.
can find John on Twitter @JasperFX, and that's the name of his website as well.
Thanks.
So thank you again, John. Thank you, Face. See everyone tomorrow. Good hunting. Remember, we're at some inflection points. Be patient. And most of all, don't just count your pips, count your blessings. We'll see you tomorrow. Thanks again, John.